Good evening and welcome to Moving Iron Podcast Market Rundown with Chip Nellinger. Chip, how you been, buddy? How's your weekend been so far?
Oh, it's been cold, Casey, and gonna get colder. It's like if it's not 20 below zero, then it's snowing or freezing rain. I'm not even sure how it rains when it's this cold, but it's been the craziest winter, man. Be 14 degrees and it should be snow, but it's freezing rain. It's like it's just bizarre. It's bizarre weather, but we're surviving.
Right.
We're inside, so we don't have to complain too much, I guess.
Yeah, well, that's true. That's true. One good thing that you have to complain about anymore is the government's officially back open for business for about another week and a half or so, and then they're gonna decide to do whatever they're gonna do.
Yeah, I think 3 weeks. I think 21 days is what. And I don't know when that clock started ticking. I don't know if it starts tomorrow or if it started Friday, but just call it a short 3 weeks. So the assumption is we're going to get caught up on what the exports were. That's going to be a good important piece of the puzzle here as we go forward because there's been some indications that China could possibly have bought U.S. corn, U.S. wheat. Irrespective of China, there's a lot of rumors that we've been cranking out some bushels here, especially on corn. So it'd be good to kind of get caught up on where we're at with export sales. There's every indication that the February 8th, that what would be the normal February crop report on the 8th, they're going to put out those final numbers, the January crop report that we missed. So we'll get the planted wheat acreage. We're going to get the final corn and bean yields. We're going to get updates on carry out and demand. We're going to get world production numbers. So February 8th will be a big day. And then here later this week, this upcoming week, we've got some important U.S.-China trade negotiations. We've got a couple of the big cheeses coming from, I think, the second command, actually, of China, as well as a team of other people are on their way to Washington. And hopefully we're going to get some news on the China-U.S. trade front. So we've got a lot that could happen and be thrown at this market and really increase the volatility as we go forward here the next couple of weeks.
Yeah. So if you take a look at the time frame now that we got this 3-week time period to figure out what we're going to do with immigration as far as funding for a wall or whatever it is they're going to do down on the southern border, as well as that March 1st deadline's creeping up on us too. So you take a look at what's going on, there's a lot of things that kind of hinge around this next 3 weeks and how important that's going to be. When you take a look at the stuff that you're seeing out there and kind of what your feel is, I mean, I've read plenty of stuff that says, yep, we're negotiating, we're still miles apart, but there's still a chance. What's your thoughts on that?
Somewhere in between. It's hard. It's really a head scratcher, because it's almost like it's part of the strategy where even in the morning time frame, we'll get a news story or a tweet that trade talks are going just great, making a lot of progress. Some other, Washington official that's involved in the trade talks by afternoon comes out and says, no, we're miles apart on this stuff. We're not anywhere close. And so it's almost like it's a, on-purpose strategy to keep everyone on their toes. I think that it's been long enough that the Chinese economy has slipped. The Chinese stock market's really been beat up. Our stock market is beat up. To read between the lines, I think that's one thing that this administration doesn't want to see happen is further erosion of our stock market. I think we're going to get some progress made on this. Will we get a finalization announcement this week? I don't know about that. But I think that we're going to keep along the path of getting things straightened out here and that we're going to see some positive news come from these meetings later this week.
Okay, so how much effect is it going to have the January stock report that we should have gotten? When was that? 2 weeks ago. We should have gotten that, and we see that China took some wheat and China took some corn, some stuff that they haven't taken from us in a while. Now they took some rice. I mean, there's a few things where they've really done a lot. How much effect is that going to have on the February stock report if there's really been nothing else as far as corn and wheat goes going into that. I mean, are they going to try to play well, maybe they're still in the game, or how's that going to work out?
That's a good question. They probably won't have a lot that they'll have to add to the bottom line. But the market, it's a futures market. So if we have some information on some specific quantities that China's going to take, regardless of what the USDA says on February 8th, the market will build that in and start making some assumptions. So, it's there's two separate things there. Number one, it's where are the final yields and demand and carry out projections as of the 1st of February that the USDA is going to put out. And then above and beyond that, if we have some additional information on certain quantities of different commodities that China's going to take of ours, then the market will kind of do the rest and start making the assumptions, above and beyond what the USDA puts out. So it could really increase the volatility. Something we haven't talked about here, we have the South American weather situation is less than ideal as well. They received a few scattered rainfall amounts in some growing areas, but there's still a big chunk of kind of the heart of the Brazilian production area that really is way below normal precip for the last 60 days. They're screaming right into the end of the growing season there. So their yield estimates are in retreat. And so that's part of this too, is what's the ultimate crop size in Brazil. Argentina's had struggles as well. They've just had massive amounts of rain during their growing season, a lot of flooding, and their yield top ends are coming off as well. So the southern hemisphere crop is slowly and surely shrinking. It's not a disaster, but it's probably not going to be record production out of either Argentina or Brazil. So you got to throw that in the mix. And we've just been basing these markets sideways. Beans are in essentially the middle of a 7-month trading range. Basically since about August, we've just kind of been going sideways in a fairly wide range, but I don't know what it is, 60, 70 cents from low to high. And so the longer we go sideways here, the more violent we're going to break out one way or the other. So, we're speeding into getting some resolution on some of these issues on crop size, on, the China trade issue, on the South American production potential. And these markets are going to move. So, we preach about that all the time on this podcast. You got to have a plan. You got to be ready. You got to know what you're going to do, no matter what way the market goes, and have a plan B as well, and make that volatility into a competitive advantage instead of just being handcuffed by it and watching a big rally come and go and not taking advantage of it and staying frustrated and kind of handcuffed by the market.
Right. Okay, so I've had two different guests on here. Podcast number 119 with Sean Hackett of Hackett Financial, and I've also had number 120 with Kirk Hens of BAM Weather, and both of them have obviously Kirk Hens is a meteorologist, so he was looking out at the next 3 months and kind of what that looked like going into April, and Sean Hackett has some weather modeling that he follows along with on his some financial stuff that he does. So sounds like to me February, March, and April, that's when we're going to get the biggest bulk of our winter. Sounds like it's kind of shaping up to be a cold run here. When will that start being a weather market based on similar to last year when you were talking now about the brutal cold up north and how long it lingered and kind of hung out? When do we have to start looking for that, and when do you see the market making reactions to that?
Yeah, I think it could be as early as February, but for sure March, and that plays into the acreage situation. Usually we get the January crop report out of the way, kind of find out where we're at on final yields, and then the market kind of looks ahead to acreage. Everything's kind of out of whack from that timing this year because of the government shutdown, as well as this China, tariff and trade war situation. So I would think that, by the end of February, first week or 10 days of March, we're going to start playing out not only what acreage we're going to plant, but the weather, and both those are tied hand in hand. So that's a great point. That's notwithstanding all the other information, China trade issues, final crop size, exports, all this stuff, we have a potential problem building in regards to planting And I've spent a lot of time in January here traveling. I've been to Tennessee, basically Memphis, through Kentucky, southern Indiana, Iowa, Illinois. It is wet everywhere, and I mean really wet. Rivers out. We're getting snow every other day in the south. It's south of Interstate 70. Tremendous amounts of rain. There's still beans in the field in areas of Kentucky and Tennessee. We have a full soil profile, moisture-wise. That's good for the upcoming growing season, but not as it relates to planting window. It won't take probably but about 2 poorly timed 3/4 of an inch or inch rains in late March and mid-April, and we've got the makings of a wet spring. Now it can turn. I shudder to even say that right now at the end of January, because things can turn so quickly, and we can get a lot of field work done and a lot planted in a short amount of time. But I'm just saying all the pieces are there. We didn't get much field work done because of a late fall. We've had nothing but rain and snow. We've got full soil, moisture profiles here. The sponge is full here. There's nowhere for any more rain to go, and it will not take much this spring as far as precip, and we've got some real issues as far as being able to get the corn acreage planted that we intend. So that is a whole other can of worms that probably by mid-March, we're going to be really focused on that 2-week forecast because we got to get a lot of field work done before we think about planting.
Right. Yep. That's a Snowmageddon 19. I think like every time I turn around, there's some massive winter storm or Arctic blast or some vortex of some sort sweeping down and pretty much getting basically Chicago to Columbus down south to basically Minton, that whole area right there. So it seems like you guys can't catch a break on that.
We've had a real winter. There's no doubt about it. It's been a long time since we've seen this. A lot of snow, rain in between the snow. Wednesday, Thursday, we're going to be close to record lows. They're talking, from anywhere from 15 to almost 30 below actual temperatures and near 60 below wind chills for a couple days. So it's brutal, and then it warms up. We get these systems that move through. It'll warm up to 23, 24, or 28 degrees. Snow a couple inches, and then right back in the deep freeze. So it's been a brutal pattern we've been in, and unfortunately, again, there's still some crop in the field in areas, and it's just been a nightmare of a fall, and now we're deep into winter, and there's likely going to be some beans still in the field as we come into March and April.
Okay, lots of fun there. Okay, so let's jump over and talk about livestock for a little bit. China's on again, off again, struggle here with the African swine fever, flu, or whatever it is that they've got going on over there, and it's kind of crept across into some wild boar populations. It's gotten to be pretty kind of a big deal now. I mean, it's one of those things now where they're having a hard time kind of controlling what's happening. So, talk to me about what you see happening in the hog market, and where do you see that headed?
Yeah, all that you mentioned is true. Unfortunately, it's not doing much to help our hog market here. So, if you go back here a couple months, we had, before the government shut down, we had a hogs and pigs report, a quarterly hogs and pigs, and it didn't show as big a growth as feared, but yet it was still, I believe, about a 2% year-on-year growth, and that's just, going on 2.5 years of increasing hog numbers here. So we've got a big supply. I don't think we've fully seen the effects on the demand side from this swine flu issue. The market's disappointed. We haven't seen more pork purchases from China. That may be coming, especially if we get some sort of a trade announcement coming this week or sometime in the next couple of weeks. So that would be greatly beneficial if you could see some sort of a confirmation of Chinese pork purchases from the United States. Until you do, we may be under pressure. So it's been a pretty poor performance in the hog market in here. Now, those deferred summer months are at, I don't know if they're a record, but they're wildly premium to the nearby, like February and April contracts in here. So you may have a little bit of that swine flu factor built into these summer months, like the June, the July, the August lean hog contracts. And you could likely see more, but be really good development if we could see China come in for U.S. pork. And maybe not just a one-time deal, but some sort of confirmation they're going to be a longer-term buyer of U.S. pork products. So that would really change the dynamics of the hog market quickly, almost overnight. But until you see that, the market has, I can't even tell you, 8-10 times, rallied on hopes of and rumors of Chinese purchases, and they have bought just token amounts. But the market's been really disappointed on that, and really put a poor performance in last week in the hog market. Cattle, you mentioned the weather, and we're going to see the effects of this weather on cattle feeding for a while. You talk to feedlots, it's kind of like the worst case scenario, right? I mean, they can handle some snow and cold weather, but it's been the cycle, what I mentioned before. A blizzard moves through, it's 10 below for a couple days, you get a bunch of snow, and then you get a warm blast and it gets real muddy. It's just about the worst feeding conditions you can imagine right now in a lot of areas of the plains. And like you mentioned, a lot of winter yet to go. So cattle closed off their highs a little bit last week. Roared back, had a pretty decent close Friday. Any break probably is going to be well supported, and we're going to see the effects on weights and feed conversion on these cattle probably all the way through, April, May time frame based on the cattle that are on feed right now. So it's a little bit of an ugly situation out there, and that should support cattle as we go forward, and probably give us at least one, if not two more opportunities to rally this cattle market and give us chances to hedge at higher levels. And if you do break in cattle, it's probably going to be fairly short-lived. Yeah, you can have a sharp $5-7 break, but there's probably going to be a lot of buying interest there because of the poor feeding conditions that you have. And if we continue to get, these big blizzard, snowstorm, conditions that move through every week or two and dump more precip and keep things real muddy in the plains, that's only going to support us longer. So some optimism in the cattle side. We really need to get some, confirmation of Chinese purchases here on the pork side to kind of get that hog market up and running.
Right. All right, so jump over to the outside markets. Take a look at what oil's been doing here for the last couple months. It's kind of been up and then it goes back down, and it's kind of all over the place right now. Fuel contracts have been some of the cheapest fuel contracts out there in a while. Take a look at that. Tell me what you see happening in the diesel market, and then also on the gasoline side of the business.
Yeah, we've had a nice rally in the energy complex here, led by crude oil. Of course, all the products, gasoline and heating oil, which is diesel, are going to follow along as well. So, we're kind of at an important point here where we've got some resistance above us in this crude oil market. If we can kind of clear the way, get maybe an open gap here, a good push with maybe some Chinese purchases of energy products. I mean, that's part of the game too, where they could come in and buy, if it's ethanol or some other some crude oil or refined products, that could be on the table as well as part of this trade deal, and that would be a shot in the arm as well. So that could be on the table, and that could be enough to push us into a next leg higher here, well north of $50 again. So, I would say from a diesel fuel standpoint, we talked about this, I remember a month and a half ago, when we're back down near the lows. Excellent opportunities here. If you see weakness going forward and you haven't got some diesel fuel booked, you probably need to look at that on breaks, getting some of that locked in at least a half a year, if not the whole year. Like you mentioned, that may be the one input that actually is significantly lower than a year ago. And so we gotta really keep that on the radar screen here and be ready to lock that in if you haven't already.
Yep, that's right. The input costs this year sound like they're going to be way more expensive than they were this time last year. So anywhere you can save $1, better try to figure out how to do that.
Yeah, and that, kind of full circle back to corn and beans, right? I mean, that, again, we talked about the weather. Unless we have a perfect spring, it could curtail corn acreage. The costs alone could curtail corn acreage a little bit. And so that, again, we've got big supplies of beans out there. Hopefully China comes back in and buys, but, it kind of plays in that corn bean issue. And strength going forward here in the next couple of weeks off of some sort of China trade news, positive, supportive trade news. If you see another run higher in beans, get up new crop beans up in that 975, 985 area versus November futures, you just have to look at that as an opportunity, just based on, hey, we got a lot of beans in the world. And if it doesn't go just right with this spring, we're going to still plant too many bean acres potentially. So, our view is be more aggressive on beans. Certainly reward rallies, well north of $4 on new crop corn. But, if you want to be aggressive on something, be aggressive on the beans. Hope you're early because it's just going to drag corn that much higher. And this whole game is about total gross revenue on your farm. And if you're early on beans, that's a good thing on corn. So lots to think about here, lots of moving parts. The gears are spinning quicker than they ever have. And I think this market's going to get pretty choppy and volatile over the next 2 or 3 weeks here based on a lot of different factors, weather, China, crop reports, acreage and spring weather shaping up. This thing could get really dynamic really quickly.
Well, Chip, that's a good segue into if folks are looking for a little help with the plan they're working on, or maybe a plan that they have in place now and they want to see if it's make it better or double check what they got going on. How would they get a hold of you to figure out what the best plan of action would be?
Best way is just give us a call at our office, 309-550-7213. I would love to chat with you and, no risk, kind of ask a few questions about what your current plan is and give some suggestions on what you might think about a few ways to improve that plan. So critically important. Margins are fairly thin right now. You mentioned input costs going up on corn especially, and having a plan really can mean the difference between making money and being competitive and having an advantage, or losing money this year. And there won't be much in between, I'm afraid. So it's a dicey time in ag right now.
Right on. Well, Chip, we'll keep your eyes on the prize there, because it looks like this week could be a fun week with reports coming in and just really trying to look at that rumor as far as what's actually been sold to China, what hadn't been sold to China. There's going to be some things popping up here and there that are going to kind of drive some market. So it'll be a probably pretty busy week for you, I'm sure.
It could be a wild one. So we'll keep our fingers crossed that it's to the upside and we get an opportunity to clean up some old crop and get a nice start on some new crop sales in here.
Right on, Chip. All right, buddy. Well, take care of yourself and have a good week. We'll talk to you again on Sunday.
All right. Sounds great. You do the same.
All right. We'll see you.
All right. Thanks.